Welcome back to Financial Fundamentals, where we break down money concepts in a way that actually makes sense. Today, sit back, listen up, and learn about one of the simplest and most powerful budgeting frameworks out there, the 50-30-20ths rule. By the end of this video, you're going to know exactly how to split your paycheck into 3 buckets, why those 3 buckets matter, and how to make the whole system work for your real life, not some idealized version of it. Let's get into it. Most people hear the word budget and immediately picture a complicated spreadsheet full of tiny categories and strict rules. But a budget does not have to be complicated. At its core, a budget is just a plan for your money. It tells your dollars where to go before they disappear on their own, and the 50-30-20ths rule is one of the friendliest, most beginner-friendly plans you will ever find. It gives you structure without stress, and it works whether you are making $30,000 a year or $300,000. The math just scales. So let's start at the very beginning. 3 buckets, 1 simple framework. That is the whole rule at a high level. Now let's unpack each piece because the details really matter here. First, the starting number. You want to use your net income. Net income, that word just means the money left over after taxes and mandatory deductions have already been taken out. In other words, it is what actually lands in your bank account. Not your salary on paper, not what your offer letter says, but the real number you can actually spend. If your employer automatically deducts things like retirement contributions or health insurance from your paycheck before it hits your account, you have a choice to make. You can either add those back into your starting number and count them as already allocated, or you can leave them out and just work with the pure take-home amount. Either approach can work, but be consistent. Do not mix them up halfway through or your math will not make sense. The 50% category. Needs are the expenses you genuinely cannot get by without. Think rent or mortgage payments, basic utilities like electricity and water, groceries, health insurance, transportation you need to get to work, and the minimum payments on any debts you owe. These are not optional. If you stopped paying them, something important in your life would break down. Here is something worth pausing on though. The line between a need and a want is not always as obvious as it seems. Food is a need, but a sit-down dinner at a nice restaurant is a want. Transportation to work is a need, but upgrading to a luxury car payment when a reliable used car would do the job is a want. The same category can contain both. So as you go through your expenses, ask yourself honestly, could I live and work without this? If the answer is yes, it is probably a want, not a need. This is everything that makes life enjoyable and comfortable beyond the basics. Streaming subscriptions, dining out, hobbies, vacations, upgraded phone plans, gym memberships, shopping beyond what you need. These are not bad things. A budget that leaves 0 room for enjoyment is a budget you will abandon in 2 weeks. The 30% category exists because enjoying your life is part of the plan, not the enemy of it. A gentle question to sit with for a moment. What would you actually do with an extra $200 a month if you had it? This bucket covers building an emergency fund, which is a cash cushion you keep on hand for unexpected expenses like a car repair or a medical bill. It covers saving toward future goals like a home down payment or a trip. It covers investing for retirement. And it also covers paying more than the minimum on debts you owe, which helps you get out of debt faster and pay less interest over time. 120% bucket, multiple important jobs. The right mix inside that bucket depends entirely on your own situation and priorities. Here is a quick check for yourself. When you think about where your money goes right now, do you have a rough sense of how close you are to those percentages? For their needs, this person pays $1,300 in rent, $200 for utilities and their phone plan, $400 for groceries, and $100 in minimum debt payments. Add that up and you get exactly $2,000. Right on target. For their wants, they spend money dining out, on streaming services, on hobbies, and they put a little aside toward a travel fund. That all adds up to $1,200, still inside the 30% limit. And for their savings and debt payoff bucket, they put $300 into an emergency fund, $300 into a retirement account, and $200 as extra payments on a credit card balance they are working to pay off. That totals $800, 20% right on track. Clean, simple, and organized. That is the 50-30-20ths rule in action. But if that same person paid $1,800 in rent instead of $1,300, now their needs alone would be $2,500, which is about 62% of their income, not 50. Does that mean the framework is broken? No, it means the framework just handed them a piece of genuinely useful information. Their housing cost is high relative to their income, and that is worth knowing. It gives them something to think about and work toward, whether that means finding a lower-cost living situation over time, increasing their income, or adjusting the other buckets while they figure it out. The rule is a guideline, not a grading system. If your needs are running 60% right now, that is not a reason to feel guilty. It is a reason to look at where the pressure is coming from and make a plan. And if your savings percentage is only 10% instead of 20% right now, that is still 10% more than zero. Progress beats perfection every single time. You build a repeatable system, and over time that system does something really powerful. It makes saving and debt payoff automatic, keeps your essentials covered, and still leaves room to enjoy your life. 3 buckets, 1 framework, a whole lot of clarity. If this video helped you see budgeting in a new way, please give it a like. It genuinely helps more people find this channel. And that is what Financial Fundamentals is all about, making the fundamentals of money clear and accessible to everyone, wherever you are starting from. If you know someone who is trying to get their finances organized, share this video with them. It might be exactly what they needed to hear. And if you have questions about anything we covered today, or if there is a money topic you want us to explain next, drop it in the comments. We go through every comment, and your questions help shape future videos. If you are not subscribed yet, hit that subscribe button so you do not miss what comes next.